Santosh Rao joins us now. Let's connect with him, Head of Research and Partner with Manhattan Venture Partners. Good morning, Santosh. Thank you for joining us.
Morning.
It's cloudy and hazy, at least in Mumbai. It's raining. But if you have to look at the Wall Street, is it looking
It's
cloudy?
cold and
Is it
dark
looking,
here.
yeah, is it looking cloudy or hazy? Do you think sun's not going to shine bright?
Mhm. I'm sorry, can you say that again?
No, I'm saying the weather in Mumbai this morning is cloudy and hazy. But if you have to use that analogy to talk about the mood point on Wall Street, is it cloudy, is it hazy?
No, actually, it's not bad. I mean, it's springtime here, so things have to open up technically. And I think the market is kind of in a holding pattern at this point. We're waiting for this big Fed meeting, which is the mother of all Fed meetings, because we really want to know what they're thinking. Are they still sticking to that higher for longer narrative, or are they going to tone it down, raise it 25 basis points, show the world that, hey, things are not that bad, still under control. We're just fighting inflation and tight job market. So they're staying on that mandate. So no need to panic. But if they don't raise, they're going to raise the alarm bells and show that things are really bad and we need to do something. So I don't think they're going to go that way. But whether they'll start cutting after that, I don't know yet. The bond market is showing that they're saying, "Hey, the rate cuts are coming down the road, and so it's the rates are coming down." You see the 2 year the way it's acting. So overall, I would say there is recession expected down the road. It's not a very happy mood, but it's not gloomy as yet. It's kind of on a holding pattern at this point.
Fed increases rates. Is that endorsement of confidence that the US financial market can digest another rate hike? Should we look at it constructively?
Yes, I think we should because there is inflation. It's quite high. There is wage inflation. There is services inflation. The job market is still tight. And the whole exercise of doing these raises was to control and bring that down. And if they just turn course and start not do anything or lower the rates or whatever so early, it's not going to be easy to raise it back again. And then we are going into the political season next year, the presidential election. So it's not going to be easy to go back and forth. So I think they're going to stay the course. Maybe they stay there longer, around 5%, and not do anything and show signs of maybe we might start cutting down the road. So I think his press conference this Wednesday after the meeting is going to be very important. People are going to parse every word that he says because we did go through some real scare here in terms of the banking, the liquidity crisis that we saw here in the US. Of course, the Europe is a whole different story, but it did spill over into Europe as well. But I think the thing that we saw, it was really localized. It was a very idiosyncratic thing, but it was a systemic risk. But nonetheless, people did get scared, and so there was a little bit of scare. So I don't think they want to shake the boat too much, but they want to say that, hey, we are on track. Don't worry about it. We have it under control, and that's what a 25 basis point will show that we can absorb it. We need to do it.
But will they just simply kick the can down the road by doing a 25 bips? Because the problem is that banks and the balance sheets which have got large unrecognized or unbooked treasury losses. If interest rates they go higher, eventually they will come and hit the balance sheets of the bank. So while Fed may do their bit in order to calm the market down, but that's like kicking the can down the road.
I think the big banks are well capitalized. I think that's been the saving grace throughout this whole crisis. They're very well capitalized. There is no credit crisis anywhere in sight. So I think that in that the capital ratios are very good across the board. So I think and the big banks have leveraged. They have the money to hedge themselves against the interest rate risk. So and they knew all along. I think the small banks, that's where they went wrong. The very small banks and the regional banks also, they did not do sufficient hedging against this interest rate hike, and that was the issue. So I think at some level, was it a supervisory and managerial lapse as opposed to any systemic thing? I think that's what people will look into, and people are really looking into that because they feel that that's the first thing they should have known because interest rates are going up, so they should have hedged it more and more. But anyway, that we will find out more and more down the road. I think the big banks have no issues with this. They will manage it. At some point, the rates will start coming down and the unrealized losses will come down. And they have enough liquidity to manage that risk at this point.
Do you believe, Santosh, that the worries of this contagion effect of what we've seen play out in the banking space is going to play out? Is there a worry of that right now?
Well, in the U.S., I mean, this fire was contained very well in a timely manner, but there are some underlying issues. The commercial property loans, all those will start coming due. There are already issues about work from home and property staying empty, and some of the big builders, and they have reneged on some of the payments. So I think there are some underlying issues going on there. Hopefully that doesn't swamp the banks and cause any issues at this point. But we'll wait and see. That's something to be watched closely. I don't think there's a contagion yet, but it cannot be ruled out down the road if the commercial property loans and all that becomes a big issue, and these banks cannot handle it. The what do you call, the uninsured loans that these companies have, or the deposits and all that. Those are issues in the regional banks and the smaller banks that may become big issues. But there is a lot of talk going on about mergers, acquisitions. So there's going to be a lot of M&A activity to absorb these small banks because they're selling at a very deep discount. So there's a lot of activity going on. So at this point, there's no risk of a contagion. There are some underlying issues that need to be watched closely, but we will wait and see how that plays out over time.
To go on that note, thanks very much for taking time out and joining in, giving us a perspective on all that's going on in the US and the rest of the world.